Okay, welcome everyone. My name is Pat Collins. I am a partner and managing director at Greenspring Advisors. Just want to welcome everyone. Thank you for taking time out of your Friday afternoon to sit on this call. From the title there, you can see leveraging the forgivable loan and tax provisions of the CARES Act for your business. This is a topic we're getting quite a bit of interest on and questions. Before we get into it, just a very brief about Greenspring. We are a wealth management and retirement plan consulting firm. We have offices both in Towson, Maryland, and also in Paramus, New Jersey. I know we have clients on the phone here in Maryland and New Jersey, but as well as all over the country. One of the things I think we've been seeing is really just kind of from our standpoint, an unprecedented amount of interest from business owners on this topic. Obviously, this has come about very quickly, and we know people are hurting and there's struggles out there, and this is obviously an area where the government stepped in and provided some help. So our goal with this call and putting this together was really to combine our expertise in the financial advisory space with some partners and experts in the banking and the accounting field that are really on the front lines of what's going on with this CARES Act and how it can impact things. So I know we had well over 300 people register for this webinar. There's a lot of people on the call right now. Just a little bit of housekeeping. We have everybody on mute. If you have a question, one of the things I would recommend is you can go in your toolbar, there's a Q&A section. Go ahead and type it in. I've had quite a few people already submit questions, and we're hoping to cover a lot of those. If we can't get to a question, please feel free to reach out to us after this webinar and ask a specific question. But there's obviously the same flavor of a lot of questions that we're going to try to cover here today. The format of the call is basically we're going to start out with Howard Bank, who's going to be talking primarily about the payroll protection program and all of the ins and outs related to that. Obviously, that is a changing landscape as we speak. Second part is going to be the Clearview Group, who's going to be talking about the tax provisions that have come out in the CARES Act, as well as maybe potentially some of the other prior legislation pieces. And then finally, that's going to be about 20 minutes for each of those presenters. And then the final 20 minutes we're going to reserve for questions and answers. And I'll facilitate that. And so if you have questions, go ahead and submit them. Well, like I said, we will try to get to what we can. So with that, I want to introduce our first group, which is Howard Bank. And I'm going to turn it over to Marianne Scully and let her take over. Marianne is the CEO of Howard Bank. And Marianne, it's all yours.
Sure. I'm going to tee this up for Stuart Lee. I know that you see on the presentation slide that Steve Widener, who is one of our senior team leaders at the bank, as well as Stuart Lee, who runs our business banking group, we're going to be presenting. Steve is, as you might imagine, or if you can't already, you will after Stuart speaks, is immersed in the application and approval process for the literally, hundreds of Howard Bank customers who are applying for this. I'll give a 1-minute update on Howard Bank and who we are. We are a almost exclusively commercially focused bank headquartered in Baltimore City, but serving the area of Delaware to Annapolis, and are, again, exclusively focused on small and medium-sized businesses. A young bank, so can feel the entrepreneurial spirit of many of you on this call. Started the bank in 2004, have grown it to $2 billion in assets, and that actually makes us the largest locally headquartered bank in the greater Baltimore area and the third largest in the state of Maryland. So believe strongly in that idea, not only of local presence and local decision making, but local policy making, and that policy making served us well in the last week and a half. As an update on the COVID-19 payment protection program, obviously we all know, first of all, the importance of small and medium-sized businesses to this country, and they employ well over 50% of the workforce in the United States. a greater percentage of the service employees who have been hit particularly hard. And we're to some extent gratified to see the response of the federal government and the state government to acknowledging the importance of keeping those people employed and keeping those businesses alive. I've been in banking a long time. I've seen a lot of different crises. I would say that this one is unprecedented in terms of the speed with which it came upon us and the steepness, the ability to impact the entire economy very, very quickly. I'd say it's also, from a rapidity standpoint, unprecedented in terms of its scope. It's affecting businesses of all sizes. It's not like the Great Recession, something that's creeping from the financial sector into the general economy that has immediately impacted Main Street America. And fortunately, given that suddenness and that steepness and that scope, I would say net, the governments have responded well. They've responded well to the banking system in terms of assuring us that as we do the right things for our customers with payment modifications, that we're not going to be penalized for that from either an accounting nor a regulatory perspective. They've responded well with one of the top 3 things that we asked them for 3 weeks ago, which was please put in place not just a loan program, but something that's akin to a grant program, because small and medium-sized businesses don't need to have just a pile of debt on their balance sheets at the end of this. And the economy doesn't need another pro-cyclical measure. It's going to make it harder for everybody to respond when the economy does, and it will, but when it does recover. The well-intentioned nature of that very quick response to some extent is being mitigated by some real execution challenges on this particular program. And before Stuart goes into it, I'll just briefly say that when the bill was passed, when the CARES Act was passed a week ago, and I know we all feel like we're living in dog years right now, is it really just a week ago? We were told that this program that would involve the SBA as the guarantor of loans would take 2 to 3 weeks for the rules to be developed. Those of us who are experienced SBA lenders thought that even that was aggressive, because the SBA tends to be a very documentation intense program, and the guarantees are not straightforward guarantees. They're more contingent guarantees or akin to insurance policies. But given the speed and the scope and the steepness of the problems, we thought that's a reasonable balance. That was Friday. On Tuesday night, we were told that based on some pressure that the government was feeling and some statements that had been made by the Secretary of the Treasury, that the program needed to become effective this Friday. So last Friday, 2 to 3 weeks, Tuesday, the end of this week. Since that period of time, the application has changed, the lender attestations have changed, the economics of the program have changed. Instead of it being an up to 4% program, it's now a 1% program. And most importantly, from not just the bank perspective, but from the customer perspective of risk management, if there is an unforgiven portion, instead of that being taken advantage of through a 10-year loan, it will now be reflected in just a 2-year loan. So it's a less than perfect program from an execution standpoint. I'm sure you've heard that a lot of banks are struggling with what to do. We've tried consistently to say we're going to do what's right for our customers, and we're putting our customers first in this program. And so we have decided we are moving forward. We began taking applications in terms of gathering data as soon as we saw that first application. We've been completing those applications through the night and today, and we are now in the process of just getting into the SBA E-Tran system. But that's a one pipeline, E-Tran, and that will have some vulnerability. But the good news is that there is some clarity on the application process. There is some clarity on how forgiveness will work. And there is now at least the beginning of access to really getting the applications in the system. If a bank is a preferred lender, once they get a notification number from the SBA, they can consider that loan approved and they can move to fund it. So with that fast-moving background and the caveat that whatever Stuart is going to tell you today is based on what we know today, but we've learned in the last 8 days that things can and will change quickly, and we're happy through Clearview and Greenspring to get any of those changes to all of you. But as of today, this is what we know, and I'll turn it over to Stuart, again, who manages our business banking group at the bank.
Okay, thank you, Mary Ann. Everybody can hear me, hopefully. If we can move forward to the next slide, Pat. This is just a quick sort of high overview of what we'll just cover. Obviously, we're going to spend much more time on the Paycheck Protection Program than the others, but we wanted to mention the others since there are some other programs out there. Mary Ann spoke to the timing, and the amazing speed with which this has all come together has really taken a lot of our breath away. That even when we set up this conference call webinar, I think that the Tuesday guidance had not dropped yet. So when the timing of this was selected, I don't think we ever envisioned that we would be in a place where we were starting to collect data and pull applications together on the day of the webinar. Candidly, I might have thought better of it, given the way the day has been going. But more guidance came last night, so we're literally sort of building this thing as we go. But I know I can only speak for us at Howard Bank, and that we feel an obligation to participate in this program. I don't think many banks are lined up to make 1% loans, but I think we feel an obligation for our customers because we just know that it's needed. And we know that there's a lot of difficulty and suffering that's going on with all of the businesses that we do business with every day and everybody that we don't. So we know that there's a big need for the program. So let's go ahead and jump into the Paycheck Protection Program. We've just hit a couple of bullet points. There are certainly many more that we could have included here, but we just tried to include the high level ones, and I won't bore you with just reading through each one of them, but maybe just try to hit on the highlights. The $349 billion, that's obviously not the entire package. That's the portion of this package that's geared toward the Paycheck Protection Program. There is a belief among those that are active government lenders that eventually this program will run out of money. We don't know when that will be, but we've also been parts of conversations where we've been led to believe pretty strongly that that additional amounts will be funded if it does run out of money. Obviously, there's no promises there, but we do believe this will be a very, very popular program. It's mentioned this SBA 7A program. The 7A program has existed for many, many years, and it is a program generally by which small businesses get working capital loans and sometimes equipment loans. They're usually on the smaller side. And this program, the Paycheck Protection Program, was sort of tacked on to the SBA 7A program, but instead it's 100% guarantee as opposed to what normally happens, which is a 75 or 80% guarantee by the government. So through the 7A program, unlike some other SBA programs, the applications actually go directly through the bank, and then there's a process by which the bank then forwards those through to the SBA. Those are, process-wise, candidly, those are the processes that are still getting ironed out even as we speak. The connectivity from the bank to the SBA, not all of those processes are as clear as they can be. But I know that things are happening now, and information is being submitted to the SBA now, and funds are being allocated now. I don't think any funds, as of today, that I'm aware of, any funds are actually able to be advanced today, but I do know that some allocations are getting made. Generally, it's for small companies. I've always sort of chuckled at this number myself as a guy that spent a lot of his career making loans to small businesses. I certainly think of less than 500 employees. There are many businesses that I think of that are big businesses that have 400 plus employees, but the SBA defines it as 500 employees or less. There are usually affiliation rules, which is rules that determine how you have to determine companies that are related to each other by common ownership. A lot of those rules have been relaxed for this program. So on the next, if we go to the next slide, use of proceeds is very specific in this case. And I think it's educational to keep in mind the name of the program, Paycheck Protection Program. When you see this, it is really strongly geared toward trying to keep people employed. So the use of the proceeds, and there is a certification right on the application that says that the proceeds must be used for payroll, benefit related things, and those are specifically sketched out in the program. The interest expense related to a mortgage, the principal may not be deducted here as a usable expense, but the mortgage interest can be, any rent paid, and most utilities. Documentation follows on a later slide, and there may ultimately be more things that we end up needing depending on individual situations, but I'll touch on the documentation as we go further on. The loan amount itself, even though the funds can be used for payroll and some of these other things like mortgage, interest, rent, and utilities, the loan amount itself is actually determined only based on a calculation of payroll. So, and I've been elbow deep in a lot of these files today that as they've started to come in, you get this data in a lot of different forms. But the idea is we're trying to verify 2019 wage expenses, and it's W-2 wages, 1099s don't count in this one because there's a separate program for independent contractors, and the anticipation is that those folks would be covered on that side of the program. But 1 year's worth of salary, you can add in certain other payroll type expenses, insurance, health insurance paid by the company, things like that. Add all of that together for a year. If anyone on your payroll makes over $100,000, you have to cap that number at $100,000 for that individual person. You don't take the person out altogether, you just cap them at $100,000. And then you divide that number by 12 to get a monthly number, and then multiply it times 2.5, with the idea being you're covering a little bit more than 2 months worth of activity there, and that becomes important as we get into the forgiveness side, which we'll get to in a moment. It can include severance already paid and excludes payroll taxes and FFCRA benefits. The rate we had on here, interestingly, we had, as of Monday, we didn't know the rate. As of Tuesday, it was 0.5%. And then as of yesterday, it changed to 1%. So that's, we prepared these slides yesterday, and they were correct as of the time that we did it. And then the guidance was dropped by the federal government last night, and on the later side. So 1% is the current rate there. We can jump forward to the next. Okay, on the debt forgiveness side, the idea is that the debt would be forgiven to the extent that it's used for the specific purposes that it's supposed to be used for, through a documentation process that isn't entirely clear yet. Borrowers will be expected to document how they spent the money over a period of 8 weeks that follow the date that you made the loan. And the other requirement, 2 down from that, is that no more than 25% of the forgiven amount can be for non-payroll expenses. The idea is that initial 2.5 times calculation, 75% of that number is about 8 weeks. So that's where that comes from. Forgiveness can be reduced if you reduce your head count. Again, only allowable expenses are, the payroll costs, mortgage interest, rent, and utilities are the only things that can be reimbursed or forgiven as part of this program. And I honestly think that the government envisions this as a grant program, and I think their hope is that all of the debt will be forgiven at the end, but certainly it's possible that all of it won't. Employees that are already laid off or furloughed, that date of April 25th, we feel relatively confident of. We've gotten some guidance from some folks, and the idea is that if you furloughed people or cut back, if you're approved for this program, you get them back onto your payroll by April the 25th. Then when you start calculating your 8 weeks out, your forgiveness should stay in line pretty well. Obviously, the hope is that your employee count at the end of the 8 weeks looks like it did at the end of the 2019 calendar year when this calculation was made. Okay, we've indicated here you'll owe money if you use the loan for anything besides the permitted use, or you don't restore your full-time employment and salary levels. There's a 25% factor. So if your salary numbers go down by more than 25% is when the forgiveness starts kicking in. The use of the loan for anything beside the permitted uses, it's probably worth mentioning that on the application itself, all borrowers are required to sign off and certify that they are only going to use the funds for these purposes. And if they don't, not repay the money, they could be charged with fraud. Obviously, it's wanting to use it for just these specific purposes. I did get a question from one of the folks on my team where the question, I thought it was a decent question, and the question was, well, maybe we're not going to be open again by the middle of April. I think the idea is that you bring the folks back onto the payroll anyway, since the purpose of the loan is to cover those folks. So the loan will cover the cost of them, and then the forgiveness part should make you whole, or at least that's the design of the program. If we can head on to the next slide, please. So this is some of the documentation checklist that we put together. This was before knowing a lot of the details of the program. So, we knew that there was a chance that we were asking for a little bit more than we might need, but we thought in this case, because speed might be important, that we would be better off to have a little too much versus a little too little. So what we've been working from mostly, in some cases we get payroll reports. In a lot of cases we're working from 940s and 941s. And we're just taking the 2019 quarterly numbers and coming up with the payroll numbers. And then if there's a payroll report that also shows some of the details that are paid related to health insurance or other employee benefits that are eligible, then we're trying to add those in as well. But you can see some of the things that we've asked for. Gross wages for each employee, including officers, if paid as W-2 wages. The important reason that we need that is to see if anybody makes over $100,000, then we need to, if it's 150, we need to back off the top 50,000 and level it out at 100,000. Okay, the next slide. 1099s for independent contractors. We asked for that information, but as it turns out, we probably don't need it because those numbers are not, based on the recent guidance, are not to be included in the initial calculation. And the reason for that, I think, is that 1099 folks are considered independent contractors, so they can apply themselves under this program as under their own independent contractors entity. But the starting date for when they can apply is April 10th. So today, April 3rd, was for most corporations and sole proprietorships, and independent contractors and self-employed begin on April the 10th. Obviously, we'd need documentation showing the total of all the health insurance premium paid, retirement plan funding that was paid by the company, not by the individuals, so by the company, and then some other sundry things that fall under that same category. So next slide. This is I'm actually looking at this one. This is the application. I believe this is the one that was as of yesterday. So this form has actually changed. It hasn't changed much. It's a little small and hard to read anyway, but there is a new form. All of the forms and the guidance is available out there on treasury.gov/cares, C-A-R-E-S, including a link to this application, which is a fillable PDF form. There is a new form of this application, but the SBA offices have assured us that if somebody filled out this older version of the form, that they would accept that too. But we put this in here just so you could get a sense of what it looks like and the types of things that you'll be certifying. So it looks like it's trying to open the form. Okay, so moving away, I guess now from the Paycheck Protection Program, there is another loan program called they're referred to it's pronounced EIDL, or that's how I've heard the SBA folks pronounce it. It stands for Economic Injury Disaster Loans. Those are up to $2 million per applicant. It's more of a general use type of thing, and it's administered directly by the Treasury. So those applications are taken by the Treasury themselves on their website. There are limitations on using this program and the Paycheck Protection Program. Those limitations, as of today, are largely, if you haven't applied for an EIDL loan already, you have to choose one or the other now. So you can do PPP or you can do EIDL, but not both after this date. If you did an EIDL loan earlier than today, you can do a PPP loan as well. But as I understand this, if your EIDL loan was used for payroll type expenses, you have to refinance your EIDL loan into the PPP loan. And I believe it will be considered part of the forgivable part, but some of that, again, some of that is still being developed. The Main Street Lending Program is geared more toward larger businesses that don't fall within the PPP plan. There are much more restrictions on this. It includes certain types of industries as well, like airlines and things like that. So this is for the larger companies in the country. And then on that bottom bullet point, relief for certain SBA loans. If there are companies out there that have existing SBA 7A loans, there is also a pool within the stimulus plan, the CARES Act, that has been set aside for assisting in the payment and actually making payments on existing SBA 7A loans. Exactly how that works, we're trying to figure that one out too. These are some of these details that are rolling out right now. What we know of it though is that the payments can be made for up to 6 months. We don't know specifically what the process is to get that started yet. We have to collect certain data on the 7A loans and somehow submit that through the SBA. And I know that we're going to be doing that for most of our 7A customers, if not all, as soon as we get squared away on what that process actually is. And next slide. The Maryland funds. I'll mention these Maryland funds, but when we were talking yesterday with some of the Clearview folks as well, we were under the impression that these funds are a bit oversubscribed now. So I'm not sure how available these funds are today. It's probably a situation where you can still apply to it and put yourself in a queue. And then if the programs are funded with more money, then you could be approved and potentially get some benefit out of these funds as well. These are for obviously Maryland-based businesses. I don't think it says it here, but I know that one of the requirements of this program is that you have to have W-2 employees on your payroll. And you see the eligible uses there. It's more broad than the PPP program. It can be anything related to working capital and things like that. There is also an emergency relief grant fund through the state of Maryland that's funded up to $50 million. Grants of up to $10,000 for eligible applicants. And again, it's small businesses, fewer than 50 employees. Again, you have to have W-2 employees as well. But again, our impression is that these these funds are a bit oversubscribed. And then on the next slide, the last one is the Emergency Relief Manufacturing Fund. That's obviously not going to apply to many folks. Those are specific manufacturers as an enticement to manufacture personal protective equipment for the healthcare industry, things like gowns and masks and things like that. So, and the next, okay, I think, Pat, are we going to do questions just at the end?
Yes, we're gonna reserve the time at the end for questions, and just on that front. First of all, thank you, Stuart, for going through all these slides. It's really helpful. We have a large number of questions that came in. Some of them, like I said, are kind of similar types of questions that we'll try to answer at the end of the presentation, but I can tell you that we probably don't have enough time to go through all of them. But I do think it's something that we will be able to follow up with, or you can follow up with us following this webinar, hopefully to answer really more specific questions that are related to your situation. I would also encourage you, obviously, if you have a bank that you work with, you have an accounting firm, you have a financial advisor that you work with, that to ask those questions as well to them. But wherever we can step in to help, we will certainly do that. And I know I speak for all the firms here just to be able to say that we'll try to help as much as we can. So with that, I'm going to turn this over now to the Clearview Group, and Nick Chavis is going to get us started off.
Sure. Pat, appreciate the opportunity that to give us the partner on this webinar and the opportunity to present with leader in the banking community in Howard Bank. My name is Nick Chavis. I'm a partner at Clearview with sales and marketing oversight responsibility. I'm going to start by giving those on a call that are not familiar with Clearview a high-level background on the firm and the services that we offer to the community. We're a management consulting and CPA firm headquartered in Owings Mills, Maryland, servicing the Mid-Atlantic region. Our CPA practice primarily focuses on providing audit, tax, planning, and compliance services to middle market companies throughout the Mid-Atlantic region. Our consulting practices are broken up between large market and small to mid-market services, some of which bridge across those two markets. For the small to mid-market, which is probably the most relevant to this audience, we provide advisory, staff augmentation, and outsourced services related to accounting and finance, technology, human resources, and state and local tax. State and local tax can be relevant in a time like this where cash is very valuable because those services tend to be contingent fee in nature, where we're providing tax savings back to the businesses. For our large market companies, we provide project-based advisory or staff augmentation services related to our accounting and finance practice, our risk and advisory and compliance group, as well as our state and local tax practice. The Clearview team has established a COVID-19 resource team to help companies navigate each of these state and federal programs that are available, for looking at it from a lens, from an HR, the lending programs that are out there, as well as tax provision perspective. So helping organizations kind of work through those programs, figure out the right programs for them, and working through the application process to make sure they're maximizing that opportunity. I'm going to take a sec to introduce the presenters, one of which, Mike Biller, who is unfortunately not on the call. Mike runs our audit practice, and he's the point person for our COVID-19 resource team. He's not presenting today. He had some personal situations. He's fine. He's healthy. But just wanted to kind of reference him because he was valuable and important in relation to putting all the content together. And he's kind of the key resource for us from a COVID-19 resource team perspective. Brian Lichter is going to fill in for Mike for the portions that Mike was going to present on. Brian's a senior manager within our tax practice. And we'll primarily be focusing our portion of the webinar on insights related to tax provisions and considerations related to the state and federal relief programs, as well as providing some insight on the Family First Act. One caveat to the information that I just want to be clear about as we're presenting, and you heard it throughout the presentation on the Howard Bank side, is that these programs are changing hourly. So what we're presenting today is the most recent information that we have on hand. Any questions or requests that you'd like to be directed to the Clearview team can be submitted directly through the webinar. And if we don't have a chance to answer at the end of the webinar, we can follow up after the session. So at this point, I'll pass it along to Brian to dig into the content from a tax provision perspective.
All right, thanks, Nick. And again, on behalf of Mike Boer, I hope I can do half as good a job as he would have done. But we'll just get into this. So the first part of this is a summary of the timeline of the tax and regulatory actions that have happened since this has all started. March 13th, there was a national emergency declared, which freed up $50 billion in federal funding to be utilized by state and local governments. Soon after, the IRS postponed the tax deadline from April 15th to July 15th. One thing to note there is many of the states have not followed suit. Many have, they've extended their due dates, but not all states have made July 15th. Some of them are sooner, some of them are later. Just depends on where you have to file. And then you have other regulatory bodies, including the SEC, the Housing and Urban Development, et cetera, they postponed their deadlines as well. On March 18th, we had the Families First Coronavirus Response Act, or Families First, followed by the CARES Act, the Coronavirus Aid, Relief, and Economic Security Act, signed on March 27th. And then Maryland had a number of initiatives that came out, along with many other states, through the Department of Commerce and Labor. So the Families First Act is essentially, this was more of a modification to the Family Medical Leave Act, the FMLA. There's a lot of HR related pieces in here, but essentially for small employers, again, less than 500 employees, they are required to give paid sick leave to employees who are forced to stay home due to COVID-19 or other quarantining. If they have to care for a family member who is sick as a result of this, or if they have to, to a lesser extent, they have to pay if someone has to stay at home to care for a child because daycare or schools are closed. In order to help pay for this, the employers are compensated with a refundable tax credit based on the Social Security tax on this. There's also family leave wages, which is a separate refundable credit, very similar. And then self-employed individuals will get a credit against their regular income taxes for, for their employees that they have to provide sick pay to. So the CARES Act is the big one that we had. It was $2.2 trillion, the most expensive legislation in history, sweeping in scope. It increased funding for testing. It enhanced unemployment insurance. It brought in the Paycheck Protection Plan, loan forgiveness. It allowed for federal loans to industries severely impacted by the shutdowns. And there are tax relief initiatives for individuals and businesses. And then I'll get into that next. So just quickly through the individual side of this, everybody will be getting, not everybody, individuals will be getting recovery rebates, which is an advance on a credit allowed against the 2020 taxes of up to $1,200 per individual, $2,400 for a married filing joint taxpayer, and $500 per child under 17. I think it was 17, right? 17, which phases out any for amounts over $75,000 of AGI or $150,000 for married filing joint, fully phased out at $99,000 and $198,000 for individual and married joint, where that would go to zero. In between there, you get something less. And they should, no one knows when they're going to be coming out. That changes daily as well. Retirement plans, I know Greenspring did a very good webinar on the retirement plan aspect of this earlier, so we just wanted to make sure it was included in here. But they've waived the 10% early withdrawal penalty if you're taking the money out for purposes of the COVID-19 sickness. You can phase in the income. You pay tax on the income over 3 years rather than picking it all at once. And if you want to pay it back, you can contribute it above your annual cap in your retirement plan, as long as you do that within 3 years. And there are no required minimum distributions. Another thing for 2020 is they have instituted an above-the-line charitable contribution, so you don't have to itemize. On your income tax return, you can get a $300 deduction for charitable contributions, and they've increased the AGI limitations on charitable contributions. And for student loans, they have frozen a lot of the payments, and they have, for federally held student loans, the interest went down to 0, and employers that pay loans for employees, they can exclude up to $5,250 of those payments. We can go to the next one. So for the business tax relief, there's an employee retention credit, which is a credit against the Social Security tax only. This is the 6.2%, not the Medicare 1.45%. Up to 50% of qualified wages that can be claimed quarterly by either claiming the credit, or you can reduce your withholding and deposits. There's also a deferral of payroll taxes, where any payroll tax that's withheld between March 27th, 2020 and December 31st, 2020, you don't have to pay until 12/31/2022. So half of it will be due at the end of 2021 and the remainder due in 2022. So that's a nice benefit. Then they have the Paycheck Protection Program. The one thing that to keep in mind is that a lot of these retention credits and the payroll tax deferrals, if you take advantage of that, you may be, or you will be in some cases, but again, the answer to most of these questions is it depends. But generally, you can't double up on the loan forgiveness of the Paycheck Protection Program and the employee retention credits or payroll deferrals. If you take those, you're pretty much excluded from the PPP. But if you can't get the PPP for whatever reason, if the banks aren't taking your loans, then at least there's other relief out there for you. A couple other things they're pretty big, but they will take a little longer to get any cash benefit for you. They've implemented a 5-year carryback of net operating losses. So starting with your 2018 tax year, if you had a loss in that year, the Tax Cuts and Jobs Act had gotten rid of carrybacks, but they've reinstituted that for 18, 19, and 20 NOLs, and they can be carried back for 5 years, which if you are a corporation, that is an automatic benefit to the extent you can use it, because you're carrying those back to a 35% rate tax year, whereas now it's 21%, and they are not limited in their use. You can offset 100% of income. Again, subject to certain limitations for all of this. They have also sped up the credit for for previously paid AMT, alternative minimum tax, where you can get that refunded quicker. Then a couple of various items. A big part of this that I was excited about anyway was they finally corrected the error in the Tax Cuts and Jobs Act related to the Qualified Improvement Program retroactively. So you can now take leasehold improvements to the extent that they are qualified improvement property as 15-year property, and bonus depreciation applies to that. So that can be significant. And then the other large piece of this is they have increased the interest expense limitation from 30% to 50% of your adjusted taxable income. And in 2020, you can, if you're subject to this, in 2020, you can elect to use your 2019 tax year as the limitation, because generally 2019 is probably going to be a better year for you, therefore leaving you a higher limit to be able to take more interest deduction. So that helps with that. And also in generating NOLs or adding to NOLs that can then be carried back 5 years. And some other smaller things that are here, and we can certainly help you with, explaining if you need it in more detail. So then the last slide we have, this, well, again, this was already gone through very well by Howard Bank. Essentially, there are these 4 funds through Maryland. As of at this moment, not sure how much money is left in any of them, but if you go to the Maryland's Department of Commerce website, they're all listed there. I was trying to see if they had any kind of notification about being oversubscribed or anything, but I did not see that immediately prior to this webinar, but you might want to check. Doesn't hurt to apply again if you can at least get yourself in line for if they increase the funding on this. So with that, that was the end of a very quick run through of the tax provisions of the CARES Act and the Families First Act. Thank you.
Great, thank you, Brian. I'm going to put the presenters here on, be able to unmute them so we can start to answer some questions here. Like I said, lots of questions have come in. We have about 15 or 20 minutes here to cover what we can. One thing I will tell you is that we are going to make notes of each of the questions that have come in. Those that we can't answer, we will do our best to reach out to you and provide answers where we can. I'm going to just propose this question to the panel to get their take. I think there was a lot of questions around how you calculate your payroll when it comes to determining the 2.5 times your payroll cost, average monthly payroll from 2019. So could maybe somebody from Howard or somebody from Clearview talk a little bit about the process for figuring out what goes into the payroll costs? It sounds like it's obviously regular payroll, but there's some other factors, and then also potentially how that may impact the $100,000 limit. So does that include retirement contributions, for example, or is that, do you include retirement contributions in addition to the 100,000 cap?
Stuart, do you want to do that one? Or
Sure. Yeah, the payroll costs obviously are wages first and foremost, but and one of the exclusions, by the way, is, I don't know whether anybody would have this, but employees whose principal place of residence isn't in the United States are also excluded from that. But the actual document that was dropped last night talks about compensation, which includes payments for vacation, parental, family, medical, or sick leave, allowance for separation or dismissal, payment for the provision of employee benefits consisting of group healthcare coverage, including insurance premiums and retirement, payment of state and local taxes assessed on the compensation of employees, and for independent contractors and sole proprietors, but those are for independent contractors and sole proprietors, wage, commissions, income, and net earnings from self-employment income, but that would be presumably somebody applying as an independent contractor or a sole proprietor. So it's the normal payroll kinds of things. I did see a couple of questions specifically related to federal taxes. My understanding is that those are excluded.
Great, thank you. Another question, seems like it's been a theme, is just understanding how layoffs, furloughs, pay cuts could impact the forgiveness part of the loan. So could someone comment on how they will determine layoffs and headcount and whatnot in determining the forgivable amount of the loan?
Yeah, I think they're just going to be looking at the numbers in terms of salary dollars and employee counts. So I think as long as the dollars are there, I don't think they're as concerned about, if it's not the same identical person. I don't think that that's something that they're going to get into, because honestly, most folks aren't reporting that on the front end anyway.
I would agree with Stuart. The numbers that we saw suggested it's total salary dollars and it's numbers of employees, not per person. Although clearly they're going, and I think there's some formulas that allow this. If there's some indication that you're over benefiting your higher salaried employees, there could be some pullback in terms of forgiveness on that. But they're not looking for person by person. They're looking for total salary dollars, less the excluded dollars, and the anything over 100,000 is excluded. Primary residents in the U.S. are excluded, and then the numbers of employees.
Got it. Thank you. Seems like there's been a lot of questions that have come in, and maybe there's been more current news that has come out, but a lot of concerns, and I don't know if anyone can really answer this, but a lot of concerns that this will be fully subscribed within, today or very, very shortly thereafter. Those of you who have been on the call with the SBA, did you have any sense of how quickly they anticipate this loan program to be basically subscribed?
Stuart, I'll do that one. Look, first of all, one of the interesting dynamics that we've observed is that Treasury seems to be driving this bus more than the Small Business Administration. And there have been moments in time, I'm not saying whole days, but maybe hours here and there, where, for example, the banks were getting information that the SBA offices were not aware of. And as Stuart alluded to, one of the residual challenges today was that even those of us in the banking community that have said we're going to take these applications and we're going to take them from all of our clients, not just lending clients, but deposit-only clients, which we understand is different than what some banks are doing. The big problem we were having was getting into the applications that we had compiled and that we had attested to, and getting them into this E-Trans system. So, the short answer is nobody knows, but if you do any kind of high-level math on the size of the U.S. economy, a $20 trillion annual GDP economy, you take out profits in that, you take it down to a monthly basis, you assume certain percentage of that number that might be payroll. The 350 with the 500 doesn't look like it's going to be sufficient to protect all of the industries who have had either existing or pending layoffs that they're facing. So I think that not the SBA, but many banks and economists believe that this fund will run out of money. The sheer barriers in the E-Trans system and the decision-making that's still going on in some locations as to what they're going to do and not going to do means I don't think it's going to be gone on over the weekend or on Monday. I saw something today that indicated that again, Treasury had indicated that as of 9 o'clock this morning, that there was 800 million that had been applied for. So, that's, pretty far away from 349 billion. But we do believe it's going to run out of money. And one of the interesting additions to some of the new communications that the SBA has provided in the last 24 hours was an explicit confirmation that this is a first come, first served program. Now, I think somebody up front this morning or in this seminar alluded to the fact that there is also indications that if it runs out, they'll fund more, or they'll fund something different, or they'll take care of it. But there's a higher than 50% probability that this particular fund will run out of money before everybody's demand has been satisfied. And that's why we have encouraged everybody, go to your existing bank and please, start this application process. We started reaching out to our customers about a week ago to make them aware of it. And I do think we should anticipate that there may not be enough supply to meet the demand.
Great. Thank you, Marianne. Really probably a follow-up question to that. There are some questions that we've gotten either before this webinar or during around timing. Is there any guidance from Treasury or the SBA with regards to how long the approval process will take, and then ultimately how long till the loan gets funded?
Stuart, you might want to talk about just the way this works, since it really is the bank that's funding it based on an acknowledgement from the SBA.
Yeah, sure. Yeah, so the approval is ultimately a bank will do an internal approval. So we're diving to one of the certifications that's required of us as the bank is to make a certification that we think that the information that was submitted to us, that the math looks right, basically. And as simple as that sounds, I will tell you, I've been in these files all day long, and it's not that simple in some cases. But be that as it may, once we get to that point and we're content that the numbers look like they're correct and everything lines up, what we are issuing an internal approval, and then that internal approval then in turn needs to get uploaded to the SBA with a number of other documents. Some of the processes of all the items that are being required, candidly, are still being worked out. But what we are in the process of doing is uploading some things to the SBA. The SBA has a portal called eTran. Nobody would know that unless you're a bank and you've done S7A loans for the SBA before. But once you upload it to the eTran system, it's either accepted or it's not accepted. If it is accepted, you get a confirmation number back from eTran, which essentially sort of holds your money. And I think it's how the Treasury is keeping track of how much they've spoken for at this point. So Marianne reported on a total from earlier this morning. That's where they would have gotten that number through what has been sent through eTran. Candidly, there are other avenues other than eTran that other banks have historically used to submit items to the SBA. I'm not sure how many of those are functioning other than eTran right now. But then your money is reserved, but obviously nobody's gotten paid anything yet. And part of the process that all of us banks are still waiting for from the SBA is how some of that, how the funding process has to work, because at the end of the day, we are the administrators of the program, but it's their program and they have to tell us how to do it. There are other things that come back to us from the SBA, and authorization, and then once an authorization comes back with that number, then you can prepare your loan documents, get your loan documents signed almost certainly electronically these days by your customer, and then you can fund. Once you get your authorization, and once the note itself is quite simple, I don't think that's going to take us or anybody else very long to create. We should be able to get electronic signatures pretty fast. All of that can probably be done in a day or two once we have clear direction on what the process is. And there are a number of banks, Marianne, I don't think you mentioned this, but there are a number of banks that have sort of held off on participating in the program at this point, in part because there are some of these program processes that aren't quite defined yet.
Great, thank you.
Look, in summary, the good news is it should not be as long as 30 days or 2 weeks or anything like that, because the banks are funding it. You're not waiting for funding to come from Treasury, but the bank needs to wait for that confirmation that indicates that the SBA has done some sort of high-level review of the information. And again, it's not a big, long application. The lender attestation is a little bit longer, but it's not a long document. As Stuart said, there can be a lot of downloads of the underlying documents, whatever IRS form you're using to show payroll information. But it's more of a document review that SBA is doing at a high level that then lets them say to the lender, okay, go ahead and release the funds. So again, I know that the Secretary of the Treasury was saying that he thought funds would be released this today or Monday. I don't know how realistic that is. But as long as the E-Trans system or these other portals into the SBA hold up and don't crash with the volume, since it's dispersed funding from hundreds, if not thousands of banks in the country, the funding shouldn't take that long. This is not so much a where's the money, other than that 349 billion cap problem. It's the process that's been the execution struggle.
That's great. Thank you. I think that's really helpful. There have been there's been a number of questions around going to your bank, and obviously, Howard, I know you've taken the approach of really making sure that you are taking care of your clients. Some of the questions have come around. What if my bank is not taking applications, or what if my bank is, I just have a deposit account, but they're not going to do a loan for me because I don't have a loan account. Understanding maybe Howard may not be able to serve those clients right now. Does anyone on the call or anyone on the panel have any sort of suggestions to the people that are not able to go through their current bank for whatever reason to apply for a loan?
Pat, this is Nick. We've seen a lot of our clients reaching out to their banks, BOA as one example, where if they don't have a credit line, if they don't have a loan with the bank, that they're being told that it's not even worth going through the application process with them. Clearview, we've done some research. We do have some partners in the market that we've identified that are taking on new clients and customers as a result of this. So if there are any in particular questions about that, you could just point them directionally to us, and we'll direct them to the partners that we see in the market that are taking on new customers to support these programs.
That's great. Thanks, Nick. Really appreciate that. So that's just for anybody listening that is questioning that. I'd recommend you reach out to Clearview and see what they can offer from a resource standpoint. I know there's a lot of questions still left. Like I said, we are going to go through these and try to be back in touch with you. We also have been recording this webinar, so if you want to refer back to it, it'll be up on our website probably sometime within the next day. But I know we're past time here, so I want to thank all the panelists for participating. Hopefully this has been helpful. Again, we're here to help. Anything we can do. We know that this is a really difficult time. I think I speak for all of the panelists that are on here. Whatever we can do to help, we're here to be able to do that, whether that's directly or to provide resources or guidance. So I just encourage you, if you have questions, give us a call. Reach out to us and we'll try to point you in the right direction. With regards to any of the open questions that are out there, we'll try to be reaching out to you directly. But we thank everybody for being on the call with us. Have a great weekend. Please, you and your family stay safe. And thanks for listening.
Thanks, Pat and Nick, for the opportunity.
Yeah, thank you. Thank you very much.
Thank you.
Thanks, Pat. Appreciate it.